By the end of this video, you're gonna get a super clear analysis of what the hell is going on with AMC stock. And I'll tell you a story later on about what happened between the hedge fund Mudrick Capital and AMC in a very unfair, dirty deal. And one of them was super stupid. Still amazed. AMC started off with $2 a share this year, and now it's around $30. 15 times in 5 months. Fuck. So let's look at AMC's business first, because that's always the first step when you try to analyze a business, because that's how you put the financial numbers in good perspective. And let me know in the comments below, what's your position on AMC? Are you short? Are you long? Or are you on the sidelines? So we all know AMC. It's the showing movie distribution business, largest in the United States, largest in Europe and the Middle East, with approximately 1,000 theaters and 11,000 screens across the world. And it's the type of business where there are big upfront initial costs. So it takes a lot of money to actually build a cinema. You need to rent the place, furnish it, set up the screens, put in the chairs. So a lot of money is spent at the start. And each time, this really repeats itself as they expand to other new locations. So expansion is very expensive for a business like AMC, but it's very unique to the cinema business, unlike restaurants or hotels. So here's why. Obviously, cinemas, restaurants, hotels, they're all in the service business. They serve people, serve them food, make them full, make them comfortable. But for cinemas, the cost of showing one movie viewing to one person is pretty much the same cost of showing one movie viewing to 100 different people. It's the same screen. So a cinema being able to operate at 100% capacity is way better on a profit margin point of view, because your revenues are here, but your operating costs are still here, even if you serve more people, right? And that's really different to, say, restaurants. You're preparing meals for one person is not the same cost as preparing meals to 100 different people. Now, where revenues are also increased, but your operating costs also increase as well. So I do understand why many people say AMC is an excellent COVID reopening recovery investment play. You know, as vaccines take up, lockdowns probably won't happen anymore, and that brings in more people, and more people go to the movies. Now let's begin the financial analysis, where I also begin to question my financial education. You'll see why as I went through the whole thing. You know, maybe you could hit that like button just to help me recover some of that self-doubt and confidence. Thank you. Going back to Gamestop in January 2021, the massive short squeeze that I talk about in this video, where Wall Street bets, Robinhood investors were buyers and short sellers were also buyers, so basically everyone was buying and no one was selling. That's why the stock went to the moon. But take a look at AMC's short interest today. It's around 20% of shares outstanding. And just in case you're not quite sure what short interest is, you know, you can really check out the video in the descriptions below where I make it much clearer with illustrations. But for now, it's just shares that are on loan and sold off. Obviously, these shares has to be returned to the original shareholder one day, but this is a percentage of the shares that have been borrowed and sold short as a proportion of all the shares. So for AMC, as I said, it's 20% short interest. So that's still quite sizable. So 1 in every 5 shares is borrowed short. If you compare this to Tesla, because many short sellers also hate Tesla and Elon Musk for some reason, now you see that Tesla has a short interest of 5%. And usually in finance, as a rule of thumb, anything that's a short interest above 15 to 20% is considered pretty high. So short interest on AMC is quite high. But that's nothing like Gamestop in January. You know, the short interest then was 140%. So it's not that kind of short squeeze that's really driving up AMC's stock price. And GameStop was really different in a business sense. It was actually changing or pivoting its business model to less retail and more focused on e-commerce. And there was an outside activist investor like Ryan Cohen that is still actively changing things. You know, he changed the CEO. He hired many executives from Amazon to really pivot its business model. But is AMC pivoting and doing something different? So that's what I'm trying to find out. What's the possible bullish case for AMC? And before I go on, you know, if you're new here, remember to subscribe to my channel, because this channel is all about making finance and investment topics easy for beginners. And if you'd like to reach out, you can find me on UpDive8 on my Instagram. So maybe it's AMC's super promising outlook, you know, because investing is all about buying now and forecasting some kind of future, right? We focus on the prospective earnings. So vaccine take-up is up in the US and Europe, and those are big markets for AMC as well. So as people leave the house, they start going out again. People would just love to go out to the cinemas to watch new movies again. Oh, wait, hang on a second. Okay, that's sort of challenging now as well. You see, the producers of movies, there's Netflix, Disney Plus, HBO. It just means that content and movie studios now, they're also owning their own distribution channel. They don't need to rely on cinemas to show movies. They can now show movies directly to your phone, PC, or TV. Maybe someone should suggest to AMC to do their own movies. Let me show you this graph. So this shows the number of movie tickets sold in North America. Now obviously 2020 was an outlier, so let's just really ignore it. And hopefully this lockdown, this COVID was just a one-time event. Movie ticket sales have gone downhill ever since. But the good thing is AMC's average price for ticket sales has been going up year after year. So that's a good sign, but not a great sign. So let's look at some of the financial numbers. Okay, before COVID 2020, the company was making more revenues each year. So $3 billion here in 2016, increasing all the way to 2019, it was $5.4 billion. So the uptrend is obviously a good sign, but it really couldn't consistently make money. So here you see it made 111 million, right? Then it lost 500 million here. Then again, it made money 110 million here in 2018, which was less than 2016, and then lost 150 million again in 2019. So before COVID, right, these 4 years added together, AMC lost around 400 to 500 million dollars. Oh geez. So this income statement isn't looking that good already, before the pandemic. So let's look at the balance sheet. Its assets, I expect it to be quite simple, right? They own and operate cinemas, so I'm paying most attention to its debt actually, because that's really what can cause some problems here. Now, luckily, we do see AMC CEO is actively addressing it, and he's lucky that the share price is high. So at the end of the first quarter in 2021, AMC had $5.4 billion in debt, and its interest expense at the end of the quarter stood around $162 million. So that's around an interest expense over $600 million a year. But wait. But before COVID 2019, they made $579 million in cash generated from its operations. And the industry's ticket sales were still dropping year after year. Okay, that's kind of worrying. But at least they have $813 million cash at the end of March 2021. That means there's just a little tiny cash buffer. Still, that's really pushing some business limits. And that $600 million a year that we just mentioned was just an interest repayment expense. So we'll also have to check out how much they have to pay back in principal. Okay, not too much for 2022. Oh, 2023, $500 million. Big number for AMC. Though there's always a possibility that AMC could refinance its debt so they can issue new debt, new loans just to pay off the old debt. And when this happens, we just hope two things need to happen. One is that the interest rate on the new debt can be lowered than the old debt, so they save money, and lenders are willing to do that then. So it's kind of like relying on the kindness of strangers. It's really not the greatest position to be in, especially when you're doing business. So anyways, I think AMC, the clock is really ticking for them. They probably have 2 to 3 years max, really just to make some good changes. But what I would really love to see is that AMC senior management will show all investors they have confidence in these 2 to 3 years to make that turnaround by voting with their feet and their money by buying shares in AMC. That shows they're hyper confident and the futures are tied with the company, that it will turn out great. So let's check out insider trading records, which show both buying and selling activity of insiders of senior management. And as a rule of thumb, just remember there are plenty of reasons for insiders to sell their stock. Some may need to sell stock to pay tax, maybe they have big liquidity needs, they need to buy a house or something, or even pay back loans. But when insiders buy a stock, there's only usually one reason, and that is they think it can make them money. 414,000 shares bought by an insiders in the last 12 months. Oh no, but there was 60 million shares sold. Whoa, that's super one-sided. This means that even management doesn't actually believe that buying AMC now is a good investment opportunity, at least from these records at this time. I mean, what's more convincing in showing that you're confident in the company? Saying you are confident, or voting with your feet and money and you are buying shares? And look at this website. Now, it's not complete, but it shows the management title as well. So director is selling, the vice president is selling, CFO is selling, Silver Lake Private Equity also selling. Everyone's selling. Wait, let's go down, let's go. Oh, there, look, I see someone's buying. Oh shit, that's 2017. Dear AMC management, if you're watching this, go buy some AMC stock, repay the love from the Reddit crowd and the retail crowd, send a message with the money that you are confident in AMC as well. Just buy some stock. So we had a look. For AMC, the movie industry is tough and it's getting tougher. And the financial numbers, even before COVID, weren't really that great. The debt is a big challenge and insiders aren't buying, but still the stock is performing super good. What am I missing? For those new investors that are watching this video, remember when you invest in stocks, normally there are two things that you have to keep in mind. One is the stock price, which is what everyone sees and trades on in the market. And the second thing is the stock value. Now these are two completely different things. Price and value are not the same. Price is what you pay, value is what you get. And if I were trying to draw two lines, one representing the value of AMC stock and the other is AMC stock price, it will look something like this. In AMC's case, it's most obvious that the stock is way up. But what's really not 100% clear is where's the value? Where would this value line be? Let's talk about what happened between Mudrick Capital, a hedge fund, and AMC. And the story was, well, they already knew each other from other previous deals. Okay, but here's what I think really happened behind the scenes. Hey AMC, I want to invest $230 million in your company. I already have the check here. You just need to give me a new stock, but you got to do it quick. And I can do whatever I want with it. $230 million. And I just need to sell my expensive stock. I wonder what does he want to do with it? But no restrictions? I just hope he doesn't turn around and sell it. Okay, deal. Here's the money. Go knock yourself out. Here's the shares. Shit. So normally this form of capital raising to an outside investor comes with a restrictive investing holding period. So like 12 months, 18 months, or even in years. Because it's important to send a message to the market, to other investors, to lenders that there's confidence and money in backing this company. But in this deal, there wasn't a restrictive holding period. And Mudrick Capital, just turned around on the same day and flooded the market with that shares just to gain a quick profit. And was I clear yet about who was stupid? Me, I'm stupid. So to put it simply, AMC does have a very challenging business now. Okay, they've lost $400 million in the past 4 years. They've still got $5 billion in debt, and an industry where it's changing, that the movie production, those producers, content producers don't really need to even be in a big screen anymore. But what they do have though is a group of loyal shareholders. There's also a group of loyal shareholders who also can be loyal customers. And what they do have is the largest footprint in offline movie distribution. So they're still way bigger than the player number 2. But if you ask me what I would do, I'll probably put it in the too difficult bucket. Investing is already hard, so why choose things just to make it harder? Guys, remember to check out this video if you need to understand the details about what happens when someone short sells and borrows stock. It's a great introduction, I know, because I was a director, scriptwriter, and actor. And more on the playlists and videos in this video here for all things investments.